Hello to all traders and welcome back to another market review brought to you by Orbex. So where can we start on this Monday's trading with gold hitting a fresh high? And on the daily chart, it's just been so remarkable how gold has held its own against a lot of the other commodities trying to hedge against it and hitting a fresh high above 25.85 at the moment at this time of reading. So with the Fed's interest rate decision expected to be at least 25 basis point rate cut, a lot of investors and economists are possibly expecting a higher cut than that, possibly 50 basis points. So we've had a bit of a drive, a further drive on gold with the expectancy that there could be more of a hawkish cut. But obviously the Fed don't really give any signals usually. Most probably it will be 25 basis points because they don't want to really run before they can walk. They've tried so hard in the last 3 years to try and get down to 2%, with the magic 2% area. So they're getting there, 2.5%, 2.6% currently, the inflation rate at the moment. So interest rates ready for a cut, especially with good jobs data as well coming in the last few weeks. Unemployment numbers are slightly down as well. So it is giving us a good narrative that the Fed is going to start cutting and will probably keep on doing so, especially with the Bank of England as well and the Reserve Bank of Australia doing the same in the next few days. So let's just get straight into the charts. As you can see here, like I said, we've had such a move, a bounce from the 2500 handle all the way up to 25.85, 25.86. So over $80 in just a few short days. It was imperative, it was very important that gold held the 2500 level, because if we did break that, then there could be a dramatic sell-off. Obviously a lot of weakness if there was a confirmation. As you can see here, there was some tests below that particular line in the few days leading up to the big bullish run, but there wasn't really a confirmation that price action will start slipping too far lower. So we've got this confirmation now. So how far up can we go? Well, a lot of economists are saying 2700 is on the horizon by the end of the year. So that's not really out of the ordinary now. So we haven't really got that much further to go, just over $100 move. And if you think, $100 here, we had some really firm consolidation here, but then we had these $100 dips and drives here. So we'll possibly be seeing another move to the upside, possibly a slight consolidation before we get some firmness and a signal from the Fed. So very exciting times. As I said, all eyes on the Fed this week. Probably one of the biggest news events that we've had the whole year. We were just waiting for the Fed, the main central bank of the world, to start giving us a signal, start cutting rates, even though most of the G7 central banks have done so. Bank of Canada, for example, Bank of England. So we're just waiting now for the Fed. That's the main driver. So let's just take a look on where the dollar is heading. And as you can see here, I did start plummeting. I just wanted to point out that this area here, the two peaks that we've got here, very firm resistance just below the 102 level before another leg lower. But at the moment, as you can see here, we are now in a trading zone that we should be looking likely that price action could just stick in there for now before we have another move to the upside or downside. So we hopefully not going to fall below 100, because again it will probably cause quite a dramatic sell-off. So that's a firm support there. And then we're just above, just below the 102 area there. So just bouncing a couple of dollars at a time. But as I said, let me know what you're thinking. What are you trading on? Have you already priced in that the Fed is going to cut rates, and how aggressively will they do so? Obviously, we'll bring you all the latest in the fundamentals and technicals as they happen. A couple of days to go, but as you can see, the market's already starting to move quite dramatically. So have a great trading day ahead. Until next time, and bye for now.